Today, for anyone watching this, Ashley runs a professional liquidation company, and today we wanted to actually talk about credit card liquidation. So, in today's call, we're going to be addressing a few things. We want to address what is credit card liquidation. We want to address what Ashley's services encompass and some details around that. And we may get into some tax strategy or accounting advice around liquidation as well. Now, this all being said, Ashley, if you don't mind just kind of introducing yourself here, that'd be great.
Okay. Hi, I'm Ashley. I own or I co-own with my partner Adam a business called Biz Catalyst. We assist in credit card liquidation, which is used in a large facet of purposes, anywhere from investing in real estate, buying parts, big, machines or whatever big investment. Like if, for instance, you had Airbnb needed to furnish something like that, that's a good purpose. And also just marketing and all anything that you can't use the credit card directly to buy and you need the cash. That's what we help facilitate.
Yeah, absolutely. Absolutely. And, for someone like me who runs a business funding company, a lot of people only qualify for business credit cards. So a lot of people I talk to, they have like a new startup business. They want to go get a bunch of loans for the business. They want lines of business credit, but their business isn't 2 years. It doesn't have the revenue, but they need cash
Yeah.
and not a credit card. Like that piece of plastic doesn't work for people.
Yeah.
So for anyone who's watching this who is maybe like unfamiliar of what credit card liquidation is, it is essentially the process of getting cash off of a business credit card without going to the bank and asking for a cash advance. Now, Ashley, I want to get into your services a little bit here in a second, but before getting into exactly what you offer, um, I'm actually curious, like, too, what is your definition of like credit card liquidation? Like, if you just had to explain it in a nutshell.
Essentially what you just said. I mean, pulling the cash off the credit card to use for whatever you need for your business. Just make
Okay.
sure that you have a plan for it. You're not just pulling cash to pull cash.
Right. Right. Yeah. So yeah, it's credit card liquidation is really important for anyone basically who needs cash versus a credit card, but maybe doesn't qualify for like those cash funding products like loans or lines of credit. They don't have the tax returns to provide, so the credit cards are really the easier products to go for. So
Yeah.
liquidation is kind of a great way to bridge the gap
Yeah.
between people who have credit cards, but like they don't have like or they can't get a business loan. And this is how people are using business credit cards to facilitate things like property acquisition, like buying homes, even with credit cards, which normally you can't do, or like you said, like equipment financing or any other kind of purchases that you would need cash for. Now, this
And
all,
I will just say it is actually cheaper when you run the numbers in terms of even if you did want to get a loan or a business line of credit, those have percentages and those minimum payments are way, way bigger than your minimum payment of 1% on the 0% credit card.
yeah, I'm glad you mentioned that because I get a lot of people who are like, "Oh, I don't want to liquidate. Like I want to go get like a line of credit." And I'm like, "You do realize you're getting 0% interest on the cards and
Yeah.
liquidation is actually way cheaper for you than the interest is on a line of credit, right?" But people don't
Right.
they're not thinking
Which
like that. You and
compounds
I know.
daily, right?
Yeah,
Like,
yeah. Right. So I'm
so like
actually
even
really,
if you try and pay it off in 30 days or whatever, and then it ticked over a couple days, you're still paying, you know?
yeah. Yeah, I'm actually glad you mentioned that because that's something like people don't think about that I'm always like trying to tell people. And yeah, it is pretty cheap comparatively to like paying interest because you're not really going to be able to find like 0% interest loans, at least not easily. And I've never seen an 0% interest line of credit before. That's
No.
really just a credit card like intro bonus for 12 to 18 months, right?
Yeah. And I'm like, I think about like the business line of credits, even the ones that get like the really stellar rate of like 5%,
Hmm.
um, that's still like your I mean, like those payments are a minimum of like $500 to $800 a month sometimes. And you're just like, well, that's, compounded. Like if you got like 50,000 off of a credit card,
Hmm.
your payment, I don't know, what does it be like two, 250 or something like that? Um,
Hmm.
and then if you did a 50,000 business line of credit, I've seen that, or I've seen like the minimum payment is like $900.
Hmm.
Like, sure, you're paying off a big chunk of it, but I mean that hurts when you need that funds for the short term before you get that income in to cover those payments.
Yeah. Yeah, because credit card minimum payments are usually only 1% per
Yeah,
month, which is so manageable for
right.
most people, using the funds,
Yeah,
pretty much everyone, that's
yeah.
so
As
manageable.
long as long as you pay it before you get that 0%,
Yeah,
plan
exactly.
accordingly.
Exactly. Exactly. But that's another conversation for like what
Yeah.
people are, using the 0% for in their businesses. Speaking of that, let's get into like your business a little bit. So you do credit card liquidation. Um, if you don't mind just giving kind of like a general overview of your services and maybe going over as well, even like timelines or certain expectations, I think that'd be great.
Okay. So our process is we have an intake document. It goes over kind of our timeline, which is currently 5 to 7 banking days. I specify banking days because we are at the whim of the banks. The banks decide on our timeline. If we could give it to you the next day, we would. But the banks have to transfer it a certain way. And if it's a holiday, nothing moves. It's the weekend, nothing moves. So just be aware that banking days, and that's, industry standard. Nobody can force it to come, deposit on a Sunday. So 5 to 7 banking days. We do ask for some information up front. We ask for an ID and stuff like that. We asked a little bit of information about what your business is, what your purpose for using the funds for, and stuff, those kind of questions.
Right. Right. So basically, you have an intake form, and then that's what gets the process started. I'm just reiterating this so that it's um, kind of all in one place here. So you send an intake form, you gather some basic information, and then it takes about 5 to 7 banking days for funds to be transferred back to the client from the credit card, correct?
From the time of payment. So after the form submitted,
Hmm.
we do our background processes and we kind of decide how we want to allot things in a very specific way. And that can take, around 24 hours or it can happen right away. It just depends. But then you get an email from us confirming the information unless there was something we're missing and we follow up with a question that we need answered before we start. After you confirm the information is correct, then we send you your invoices, you pay the invoice, and that's essentially really the start of your timeline.
Hmm.
So once that's paid, those are moving around in the background. In the meantime, we verify that the depositing bank account is working for us so that we can know that the full
Hmm.
funds are going to reach you without any problem. And we just stay in open communication the whole time. And from our experience, that's kind of what sets us apart from a lot of other ones because a lot of other liquidators just are not responsive.
Hmm.
And you always hear from us within 24 hours, unless it's a weekend. Um, and so, like, people really appreciate it because it's the comfort of, okay, there's somebody there responding, working on my stuff. And then, you know, each time it gets faster and more convenient.
Yeah, yeah, because I imagine when you're having your own credit card liquidated, especially if it's like your first time and you're not used to this process, you're paying these kind of large invoices, you want to know that someone's like taking care of things. And that money's not just going into the void, right?
Yeah.
Anyone, especially people who are new. I remember my first time liquidating, Um, that was like a whole thing for me as well that I like had going through my head. So I think trust is really important in communication in the liquidation process, just like it is in the business funding process.
Mhm.
Um, are there certain like amounts that people can liquidate versus can't liquidate? Or maybe do these amounts like affect the liquidation process in any way?
Um, I wouldn't say there's necessarily like a can and can't. I would say there's certain increments that it wouldn't be worth it. Like it wouldn't be worth it to liquidate like $1,000 probably. It might be too small
Hmm.
to do, and like you might figure out how to do that one yourself or something like that if you can.
Hmm.
I've done large amounts up to like, 150K plus. We spread it out a certain way because we try and look at the history of what the banks see and how they respond to it. And they're just more comfortable without it all coming out at once. Like the day you get your card, you activate it and then you just pay and max out the cards. Like they don't love that. So we just kind of make a strategy for you that works best on based on the history that we've seen.
Interesting. So you said that you could look at the history of the card. Is that what you had said?
Not, the history of working with the banks and the charges.
Got
So, like for instance, Chase, right?
it. Yeah.
If you get a Chase card and
Mhm.
it's 50K and you just received it that day, you called and activated it, and then if you got like a 50K invoice for the exact same amount, they're probably gonna freeze it and like freak out. They're like, don't, no, wait, that's like, they don't uh, like you liquidating the entire card on that first day. So,
Hmm.
like, sometimes I'll advise, okay, so the first day we could do maybe like a smaller one and tear it off over a couple days, or you can activate it and let it breathe for 2 days or something like that. Not a long time, just
Yeah.
sometimes it's not good to do everything day one. The
Yeah.
banks consider it fraud, they hold the funds and stuff like that.
Yeah, right. Because it's like you just got this brand new $50,000 credit card. And what's great about credit cards, and one of the reasons why I think banks aren't lending like cash products to newer business owners is because they don't have that business history. And once you wire transfer away cash, like you can't get that cash back. You know what I mean? It's not the same. You take someone to small claims court about it. But with the credit card, you're protected. Like you can always like call the number on the back of the card and get some form of protection from the bank. And so I think that when a bank sees a super large transaction on a new card and there's no history or seasoning built there, the bank goes
Mhm.
into like protect mode where they're like,
Yeah.
this is usual behavior. And the bank knows that there's a chance that liability or potentially loss of those funds, if something were to go wrong, might even fall on the bank.
Yeah.
So that's what's beautiful about credit cards. But then at the same time, you just have to get over those like protective measures that the banks put in place. And so what's nice about working with you as being an experienced liquidator, you know what kind of banks have certain behavioral patterns and you know how
Mhm.
to like work with the banks as well because I have seen people try to liquidate credit cards on their own and I've seen it go wrong, right? So
Yeah.
my advice, I work with a lot of clients and my advice is like always work with a professional because you want this process done and you want it done right.
Yeah.
Otherwise you could lose your funding. So
Yeah. And I will tell you a story of something that it was kind of in this relation. So we had a client that was using us, but they were also using another liquidator, and they did not communicate that to either liquidators. And what happened was, one of our rules is we do not deposit into the affiliated checking account to that card. Example is if you're liquidating Chase, do not deposit into your Chase banking account. They have the ability to see that transaction and see what you're doing, and they will close you down and not work with you again. So we always say, for instance, if you're liquidating a Chase credit card, deposit it in US Bank, deposit it in Bank of America, um, because they'll see like that difference in percentage and they can figure it out. They can track it. They know what they're doing,
yeah.
what they're looking for. But so what happened was this client was, I guess, trying different liquidators. I don't quite understand why they were doing it, but they did 10K Chase and deposit in US bank account. And then with the other liquidator, they did 10K with them and they deposited in their Chase account. So what happened was they essentially, even though they were doing it the way that we advised, each liquidator was giving them good advice, but they weren't communicating that there was a thing, and their accounts got shut down.
Yeah, so they swapped the money to card to bank account, and they did the same amount.
Yeah. Now, if you had
Oh
been
no.
using one single liquidator, we could have prevented that. But
Yeah, yeah, that makes a lot of sense. And for anyone watching this too, to clarify, these banks aren't like communicating with each other. It's not like Wells Fargo seeing an incoming transaction from your company and then is going to Chase and being like, "Hey, did this come off your credit card?" You know what I mean? Like that's not how this works. But
right.
Chase can see that kind of stuff internally. And so, you want to use like the lack of communication with these banks just to your advantage because you don't want to be leaving like a paper trail with this kind of thing. And so, another reason why I recommend working with a professional liquidator like you who has seen the ins and outs, right? Because there are some pitfalls that you can fall into. And knowing these things is like super, super important. I've seen so many people get shut down trying to do this process on your own. And I guess on that note, since we're on this topic, is there any other rules that you can think of that like might be good in working with primarily a professional liquidator? Do you think that covers it though?
Um, yeah, so one of the like one of our rules is we don't liquidate personal cards.
Hmm.
There's a few
Right.
reasons for that, but I think for us primarily it's where people don't realize that when you liquidate a personal card, the hit that it takes through every facet of like business and personal that you can tank it by maxing out a personal card. I mean, we're essentially helping you not show anything on your personal side. So if you liquidate your personal card and that might report in 3 days and you just made your score that you worked really hard to get 70 something to like 600 and something, you know what I mean? Like, so that's one of the main reasons we don't do it. Also, like they don't necessarily have the same offers. So a lot of people think it's like 0% charge card, but really it was a 0% transfer card and they didn't do it right. And then so in order to avoid certain things, we just say, like, we just don't do it. Not and it's just so we don't have to go over, okay, are you sure you are aware of this? Are you sure you're aware of this? Are you sure you're aware of this? So
Yeah. Just like so many things that could go wrong with liquidating personal cards, right? So it's best
yeah,
to just avoid.
right. And I mean, like even using a personal credit card like a little bit, like there's such a big variation in points, like maxing it out. It's just you I've seen somebody liquidate one, they had like 6 cards. They liquidated one personal card to the max, and their business cards got shut down because they were like the business was like, oh, their score went down. Something must have been wrong. There's just a weird gut reaction that banks do that I'm just trying to help people avoid, basically.
Yeah, good. Protect people.
Um,
That's what you do.
so so yeah, don't liquidate personal cards. Just don't do it. And okay, so the depositing bank, um, being aware of the timeline. Best practice is always to deposit into a business banking account, not in a personal
Mhm.
bank account. Part of the reason for that is to help your accountant too, because you really should keep funds within your business anyways, but you don't, it's harder to
Hmm.
explain why a big chunk of money went into your personal account because banks will report that to the IRS, whereas not so much with your business bank account. And then you have to like explain it away in your taxes. It's just very difficult. So it's just best practice, keep banks or keep the liquidated funds within your business
Okay.
if at all possible.
Yeah, good stuff. Um, so you're working with a lot of different business owners, probably across the board in all kinds of industries. I'm sure you get a ton of people getting started in real estate because in real estate there's a lot of cash transactions. Real estate or outside of real estate, what kind of businesses do you typically work with? And then is there anything that people in certain industries maybe should know that could be like industry specific when it comes to the liquidation process?
So yeah, I work with several different businesses, so we definitely have a few regulars that will come to us and they'll do liquidations to cover payroll. That's a fairly common one. They do smaller amounts, but you end up seeing them like once or twice a month. Um, Also, obviously, investors, we do see a lot of investors. I do see a lot of people getting funds to, help furnish their units or anything like that. One
Mhm.
of the things that I obviously is a down payment for the property that you're purchasing. That is a great use for the 0% credit card to help get you going. The one thing that I will say as a protective measure is if you're using a bank statement to qualify for that loan, you're going to have to explain to that lender where that money came from. And you don't want to say it's another loan because that'll make it so it's not, you didn't qualify, because it doesn't look like cash when you say I got a loan and that's where the money came from. So the best practice for that is, if at all possible, you can let the funds sit in your bank account for 2 billing statements. Then they won't ask where that money came from. You can just say that I had liquid funds ready to go for this.
Okay, so if they're using it basically for like a down payment or for some sort of property acquisition, you just recommend leaving it in for two billing statements. That way they don't get questioned about like the source of the funds. So it
Yeah.
kind of makes that process a bit easier for them,
Yeah.
right?
Right.
You mentioned some stuff about like putting liquidated funds into like personal bank accounts versus business bank accounts. That's so interesting. I've never thought of anything like that. Like I didn't realize that personal funds were, I guess, more so reported than funds that are hitting the business bank account by the banks. But if you can just elaborate a little bit, if there's any kind of insight you can give on like maybe specific tax strategy or accounting advice around the liquidation process, because obviously there's a lot of like money coming in, a lot of money coming out. One of the most common questions I get, that I feel like I've only been able to answer adequately at best was, how do I work with like my tax professional when performing liquidation?
Okay. Um, yeah, and I'm gonna start this with a disclosure. So, I am an accountant. So I do have a little bit more knowledge in this part of the field, but I can only give advice in terms of what I've seen and what I've done myself. As you know, it's always important for you to ask your own tax professional because your situation might be unique and it might not apply to you. So, starting with that. So the classification is, I always say, be honest with your accountant. Um, Liquidation is not illegal. So you can absolutely tell your CPA, and the CPA can report it properly, because even though the bank doesn't like it, and that's why we're not telling the bank, it's not illegal to do, because actually, truthfully, the credit cards do it themselves. It's called a balance transfer,
Mhm.
right? So it is the same thing. We just help you facilitate it when they don't offer that balance transfer. But so essentially, what I say on mine is, I got a loan and I've tracked it with the paperwork of that credit card. So I can show the record from the credit card that I got a loan from that credit card. This is the funds right here that I have in my account. Now, one of the write-offs is I could write off the percentage that I paid to the liquidator. You're not writing off the full amount
Mhm.
because you got the bulk of it back, right?
Mhm.
So um I see it. Some people ask me if they should be issuing me a 1099 or something like that. And I'm like, no, first of all, I do report everything, but if somebody issued a 1099, it would look like the full funds, but you get the bulk of it back. So just to be clear, Um, the industry standard for liquidation is 6%. That 6% is your write-off. You get the rest of it back. Now, what you can do is when you use that money to purchase real estate, to purchase furniture, equipment for your business, that's the write-off portion of it. That's the record that you can show and document and give it to your CPA. So you don't want to write it off twice because that wouldn't be accurate, right?
Yeah. So yeah, because I always like in my head it made sense that I was like, okay, it's coming off the business credit card, so that's an expense, and then I get the money back, so like that's income. Um, so basically you're saying that's
Not
not,
income.
say that again.
It's not income.
Okay. So yeah, you're saying that that is not how you have reported it in the
No.
past, and you would report it actually as a loan from the credit card to you with an expense of a 6% fee that is a tax write-off, that 6% fee, right? Simple as that.
Yes. Yes. Now, and the reason, my reason behind the loan statement is because, and it's not income, is because you're paying it back. You're paying the full amount back. You're not getting to keep it. So that's why it's not income. Yeah, the write-off is the 6%, what you're using the funds on. And then also, if there's any fees associated with maintaining that account, if interest starts accruing, those are write-offs. Then you also have to explain money leaving your account to make that payment. So that's why, for my purposes, it just makes sense to make it as a loan.
Mhm.
And that's how I record it and track it and pay it back. So it's kind of a wash that way.
Yeah, I hear you. And I think something that's really important too that you emphasized is staying transparent with whoever your tax professional is. Liquidation is not illegal. But it's also something that's, unorthodox in a way that a lot of people don't know about. And so I would be surprised if someone watching this is tax professional already knew, like, oh, my clients are liquidating. That's probably not it. So, it might need a little bit of explaining.
Yeah.
But once explained that it can be like a loan and reported that way, it should be something that they're able to understand and they're able to facilitate
Yeah.
tax-wise for you, right?
Yeah. And I
Cool.
mean, a simple description of what people would understand is that I got a transfer from the credit card to make some payments, and
Yeah.
everybody understands what that is. So if you maybe they don't know or understand the word liquidation, they would understand that.
Yeah.
I
Exactly.
just got a balance transfer of cash from my credit card.
Yeah, pretty much. Well, cool. That was the bulk of my questions, really. So now we know what liquidation is. We know what services you provide. We know expectations and processes regarding your service. Um, some general ground rules for liquidation, things to say, stay safe, and also some industry specific rules and things to say, stay safe in regards to liquidation. And you've also been able to inform anyone watching this on how you have been able to properly structure liquidation in regards to like a tax and accounting point of view. So this is not information, and I'm so glad that you were willing to do this with me because this is not information that, I think people are really finding on like some online course. This is like not information I've ever seen on YouTube or anything like that. Like this is really stuff that like you have to be talking to a professional and experienced liquidator to understand. And thankfully, we were able to bring you to do that. So yeah, this is really cool. Like I'm super excited that we were able to do this.
Yeah.
That's all I got. I mean, do you feel like there was anything else that should be covered, or do you think that was solid?
No, I would say, and I do get the questions a lot about, you know, the how to categorize it and how to communicate it with their CPA and stuff like that. And like even my partner, he's like, I don't want to give that advice per se because of the liability purposes. You're going to find a lot of liquidators do not want to like have that conversation.
Hmm.
In my situation, it's fairly unique to have somebody that's number one done accounting, number two has done, runs a liquidation business, and number three also is an investor. So like the intertwining of the three things is kind of unique.
Yeah. Yeah. For anyone watching this, Ashley right here is a triple threat. Okay. You want Ashley on your side. Yeah. Well, all right. Cool. Well, sounds good. With that, I'll go ahead and wrap this up. But for anyone watching this, hope you got some good value out of this. As always, if you're looking for business funding and looking to tap into my network and some of my resources, whether that be VPs or high-level business banking relationship managers, credit repair specialists, or professional liquidators like Ashley here, you know what to do. Just comment the word funding underneath this video and I will actually reach out to you and we can book a call sometime to discuss your needs. Ashley, thanks a lot for coming on and doing this. And yeah, I hope you have a good day and we'll talk soon.
Thank you. And also, I highly recommend Sophia and Xavier.
Thanks, Ashley. I appreciate that. All right. Bye.